This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on March the 8th, 2013. Our time is 8:35 in the morning Mountain, 10:35 Eastern. The radio show runs in Toronto, News Talk 1010. Also in Edmonton, 630 CHED, and in Calgary, News Talk 770. If you ever miss a radio show, we are online. Obviously, Harold's website's hesradio.com, rarecoloreddiamonds.com, on the radio, online, and we have a podcast through iTunes. Just go to iTunes, type in World Financial Report on radio. You can listen to our radio shows there, Harold's Daily Market Commentary. You will never miss a show. One thing I wanted to touch on for those in Edmonton, next week, we are going to be on at 3:30. Keep that in mind. We are going to be on at 3:30 prior to the Edmonton Oiler game. So if you listen Edmonton, please tune in at that time, 3:30 next week. As we start our show today, we have sequestration. It did kick in the United States. They continue to negotiate back and forth. March 27th, if they don't have a deal, at that point, the government shuts down. As we mentioned in the past, very serious concerns in the United States with the economy. 60% of their citizens believe that the U.S. is in a recession. The biggest monthly income drop in 20 years last week. Sure, the Dow is surging, but a lot of people feel that the economy is not improving, or even if it is, it's being done based on quantitative easing and low interest rates. If you take a look at the Dow since 2007, it is down 50% priced in gold. The Fed's Janet Yellen came out and said quantitative easing for her, as far as she's concerned, can continue for quite some time. On the geopolitical front, we had Iran being a very big concern. Again, the United States wondering, should they strike? Hugo Chavez died, uncertainty there. North Korea threatening the United States with a nuclear bomb. And we had the jobs report come out today in the United States. It was a good number, but if you look behind the numbers, a lot of the jobs were part-time jobs. We had a good number here in Canada, too, which was good news. But the truth is, Harold, it's hard to make a living on a part-time job. There's just no getting around it.
You're 100% right, Randy. And again, it's just another example of them putting out numbers, to make Wall Street look that much better. And the fact is that when the markets opened this morning, gold was down heavily and silver was down heavily, but I don't believe that they really believe the numbers, the job numbers. And as you said, which is true, the majority of them were part-time jobs, which really doesn't help the overall situation at all. When gold opened this morning, it was down to $1,560, and now as we're taping the show, it's at $1,580. We've seen a $20 change in the price of gold just in the first couple hours of trading. Silver, very similar. Silver was down to $28.26 this morning. As we're taping the show right now, we're at $29.25. So silver's actually made a dollar move to the upside, which again is very good to see. There's very heavy support in gold at $1,500. And I do not want to see gold break below that, but I'm starting to see gold looking a lot better at this particular point. And again, I think that a lot of the numbers coming out will definitely help gold over the near term and the longer term. Silver, similar situation. Silver, very heavy support in silver is at $26, and I doubt that we're going to break that $26 level, but again, with the games that they play in the market, you never ever know. Platinum's even on the day at $15.99. Palladium's up $10, trading at $773. Palladium has actually been the strongest of the metals so far this last couple of weeks. The Dow was up 38 points at 14,368. The Nasdaq up 4 points at 3,236. The real trouble today is with the U.S. dollar. It's up 65 cents at 82.74. That's why there was so much pressure on the gold market earlier this morning. The TSX is up 5 points at 12,831, and the crude oil market is down 20 cents at 91.33. So the markets are still basically trading in a range at this point, but the fact is that we're not trading in the market. We're buying and holding our hard assets because that's the smart thing to do at this point. Wall Street comes out with very negative news on gold, but then there's prognosticators and analysts that are brilliant also that basically say that gold and silver are amongst the best assets that you could own and are going to make substantial moves. So you've got almost like a 50-50 split at this point. But the thing with Wall Street and their analysts, they were 100% wrong on gold for the last decade, so we really can't put a lot of credence in what they think about the gold market at this point. I myself have not sold any of my physical gold or any of my physical silver at all, and I'm still holding all of it. The only way that the U.S. economy will ever get back on track is if the middle class starts to spend again. And that's a long way off of happening, because the fact is that the unemployment numbers are still extremely high. And it's going to get higher because, don't forget, because of sequestration, there's going to be 800,000 to 1 million people let go probably over the next month. And that's going to bring the unemployment numbers back to over 8%, which will be a true drag on the economy. So the fact is that the economy cannot get back on track in the U.S. if the middle class is not spending, and they're just not spending. There's been tax hikes, which is hurting them and the class below middle class, and basically that's why stocks like Walmart will not fare well based on the fact that it's their clientele that is getting hurt the most in the market. The only ones that are doing well at this particular point are the hedge funds that are moving the stock markets up and down. And basically, most people cannot even afford to trade in the stock markets at this time. So, again, as far as I can see, the fundamentals for the hard asset market are getting stronger and stronger. And again, the reasons for owning paper assets like stocks at this point is something that's getting riskier and riskier. So at this particular time, that is not even an opportunity for us to look at these markets, especially trading at record highs. But if you look at certain stocks, back from 2007 when the Dow was at 14,000, when the Dow was at 14,000, stocks like Citibank were at $85, General Electric was $90, $85 in that area, Bank of America was a $60, $70 stock. None of those companies are anywhere close to the highs that we saw back in 2007. In fact, General Electric has dropped from $85 down to $5 when the markets plummeted in 2008 and is only back to $23 now. We're back up to record highs. We have record highs in the Dow, but General Electric is about a third of what it was back in 2007, 2008. Very similar situation with Bank of America and Citibank. Their stocks have not recovered anywhere close to where they were back 5-6 years ago. So all in all, don't get confused by what's happening or even tempted to put your hard-earned money back into the stock market. The chances are that market will fall again heavily once the hedge funds decide to take their profits.
Speak with Worldwide Precious Metals. They're the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Their website is wwpmc.com. Their telephone number 1-866-623-2002. Give them a chance to educate you as to why you should have an allocation of precious metals in your portfolio at all times and why you should have your own precious metals investment account. They can help you manage your precious metals investment account, trade the market if you want, buy or hold the metal. They're there to help you maximize the profit, minimize the risk. They're the experts in a very specialized market, and that's why you should deal with experts like Worldwide. The metal can be stored in your behalf, delivered to your door. You can take physical possession of your metal anytime you want, and they will go through all the different ways there are to own physical precious metals. And this is a liquid asset that can be bought or sold with a phone call. And remember, at all times, every portfolio should have an allocation of precious metals, good or bad times. When you're allocating the money that you have today, with what's going on around the world with currency crises and inflation, deflation, obviously the financial crisis that we went through, some people obviously still believe we're in a recession, and geopolitical turmoil, now is a time to have hard assets in your portfolio, gold and silver. You can start up your own precious metals investment account and have liquidity immediately in and out of the market. As I mentioned, secure storage insured to the full value of your investment, 24/7 online access, and a full-time representative to help you with this market. Their telephone number, 1-866-623-2002, 1-866-623-2002, the website wwpmc.com. Get our free weekly newsletter from Worldwide as well. And one of the stories we have in our newsletter under the gold section, I think it is so important, is Jeff Clark from Casey Research wrote an article called Gold is Over Just Like in 1976. Goldman Sachs has lowered its gold price projections and says the metal is headed to $1,200. Credit Suisse and UBS are bearish. Citigroup says the gold bull market is over. So I guess it's time to pack it in, right? Not so fast. As we've written before, these types of analysts have been consistently wrong about gold throughout this bull cycle. Another reason to disagree, however, is history. We've seen this movie before. In the middle of one of the greatest bull markets in the modern history of bull markets, the one that culminated in the peak of the 1980 gold price, remember, we had a 20-month one-way decline. Gold experienced a 20-month one-way decline. Every time it seemed to stabilize, the bottom would fall out again. From December 30th, 1974 to August 25th, 1976, gold fell a whopping 47%. In 1976, obviously it had to be a tough year to be a gold investor. The price had already been declining for a year, and it just kept on sinking. Since that's similar to what we're experiencing today, I wondered, what were the pundits saying then? I wanted to find out. So what's the difference in the mood today versus the mid-70s? Nothing. This shows that the same concerns, fears, and confusion we now have existing at a similar point in the gold market existed back then. And you can read this article and see all those comments. And he goes on to say, virtually every comment made in 1976 could be applied today. Keep in mind that most of those statements were from two publications only. There are undoubtedly many more similar comments from that year. The obvious lesson here is that patience won out in the end. It took the gold price 3 years and 7 months to return to its December 74 high. It only took another 18 months to soar to 850. Today, that would be the equivalent of gold falling until June this year and not returning to 1921 until April 2015. It also would mean we would climb to $6,227 and get there in November 2016. Could you wait that long for a fourfold return? This review of history gives us the confidence to know that our gold investments are on the right track. I hope you join me and everyone else in accepting this message from history and staying the course. So what will your kids or grandkids read in the future decades? Buy gold. It's going a lot higher. That according to Jeff Clark, Casey Research, March 4th, 2013. And I thought that was an article, Harold, that was so important to read because I think in some ways we are in similar circumstances. To give you an idea as well, in our silver section of our newsletter, I found this little picture. It's of a silver quarter. In 1964, the minimum wage was 5 silver quarters per hour. That's as of 2/27/2013. Those 5 quarters are worth $26.21 in melted value. And they go on to say at the bottom, we don't need to fix the minimum wage. We need to fix the money. The money. And that really does put things into perspective, doesn't it?
You better believe it, Randy. That is an excellent analogy and 100% true. And again, I've traded the markets back then, so I saw that. And basically, it's almost identical to what's happening now. In fact, the feelings and the emotions in the metals markets back at that particular point were very similar to what they are right now. So again, if you don't learn from history, history always repeats itself, and we're almost at an identical situation that we were back then, and then gold and silver went on to make brand new highs, in fact, lifetime highs until 2011. So if you'd like to see the charts on that, going back to the mid-70s type of thing, give us a call. We'll send those out to you free of charge, and you can see the moves that happened at that particular point, compare them to what's happening in the markets today, and I think it'll give you a much more comfortable feeling, understanding that these markets do go through cycles. They are cyclical, and again, just because the market's been down or sideways for the last 2 years, which this market has been, it's almost identical to what happened in the 1970s, and again, gold and silver went on to make brand new highs. So I think it's extremely reassuring and a phenomenal analogy, and I'm glad that you brought that up, Randy. That was a very good report.
Yes, I would really encourage people to get that report from Worldwide. Get our free weekly newsletter. We send it out via email every week. You can go through it in 5 minutes or spend hours. wwpmc.com, telephone number 1-866-623-2002. Let them earn your business, educate you why you should have your own precious metals investment account. In our newsletter as well, we have Jim Sinclair. He was interviewed, and he does very few interviews. He was interviewed by Eric King of King World News, and it resulted in 3 stories. Jim Sinclair talking about gold, and a great article there. He talks about, as well, we are witnessing a historic low in gold. And one of the articles that really caught my attention, and it did worldwide as well, Jim Sinclair, paper markets to disappear as gold war rages. And one of the analogies I heard this week, and I thought it was interesting, is that you have paper bears, people using paper proxies, versus physical investors, strong physical buying around the world, those people being the bulls. So you have paper bears versus physical bulls. And eventually, we obviously believe the physical bulls will win. Jim Sinclair says, the character of what's in this gold market is so different from the bull market of the 70s. The bull market of the 70s was mostly traders and some central banks, and there wasn't any huge sovereign interest. What we are dealing with right now is China and Russia, who are doing what they're doing in terms of accumulating gold because they know the end game. The manipulators of the market will come face to face with this physical reality. When they mess with the markets now, they're going to be playing with China and Russia. Any takedowns that occur will be brought to an end when the physical market fails to fall as the paper markets trade lower. This is something that can be seen when volume in the physical market swamps the futures markets. This is the time when nations take positions. Remember, every one of these nations can create money when they choose to. So they don't have to go out and unlimited, he says here, they have unlimited ability to purchase gold if they know the end game is in gold's favor. The answer is yes. The bears will lose and the bulls will win before this war is over. And you can read those articles from Jim Sinclair and King World News. Eric King, a great website. I really encourage people to read what Jim Sinclair has to say. He believes now, Harold, he is predicting $3,500 gold. Also this week we had a mining executive, and he's very well known, Rob McEwen, and he's been on the Canadian Business Channel, still sticking to his guns, still saying $5,000 gold. So if there's any doubt in your mind where this market is going or you have any questions, get our newsletter, read it over, listen to our radio shows. There are people out there, Harold, based on a lot of knowledge and a lot of research, are very, very bullish on this market.
And they should be. But again, there's a lot of confusion because you're listening to, 2 different sides. And there's always 2 sides to a story. So you listen to Wall Street and they say the trade in gold is over. Then you listen to, again, guys like McEwen and guys like Embry and Sprott and those guys. And again, their work says that this market's going to come back and make brand new highs, and I'm in agreement with them 100%. I've traded these markets for over 35 years. I certainly know how to read charts and technical analysis, and basically I'm in the same field as they are. I believe that we are going to have a huge winner in gold and silver, and again, this is a similar time to the middle 70s when the markets consolidated and then the markets took off again and came back and made brand new highs. I believe that is the scenario that we will have moving forward.
Speak with Worldwide Precious Metals about investing in gold and silver, platinum, palladium. Start your own precious metals investment account today. 1-866-623-2002. Their website, wwpmc.com. Rick Rule, he was interviewed this week on multiple media platforms. He was on the Canadian Business Channel. And he said, I am also focused on explaining to investors that the pullback in bullion prices, never mind the bullion-related equities, is a sale. It's a cyclical decline in a secular bull market. It's very, very important for investors to understand that. As the outside market conditions appear to most people to be getting worse and worse, for us, they are getting better and better. And he used the analogy on the Canadian Business Channel when he was interviewed on Market Call tonight. He actually referenced his friend John Malden. Buy assets you can't print. Buy assets you can't print, because the way things are going, you're going to see lots and lots of printing. And we touched on it on past shows. You have to have a long-term view of this market. And a person that is raising the alarm bells is someone to take, obviously, very, very seriously. His name is Stan Druckenmiller, one of the best-performing hedge fund managers of the past 3 decades, and he has a warning for the youth of America. Don't let your grandparents steal your money. Druckenmiller, who's 59, said the mushering costs of Social Security, Medicare and Medicaid, with unfunded liabilities around $211 trillion in the United States, will bankrupt the nation's youth and pose a much greater danger than the country's $16 trillion of debt currently being debated in Congress. He says, while everyone is focusing on the here and now, there's a much bigger storm that's about to hit. He was interviewed on Bloomberg. I'm not against seniors. What I am against is current seniors stealing from future seniors. And he says unsustainable spending will eventually result in a crisis that's worse than the financial meltdown of 2008, when $29 trillion was erased from the global equity markets. What's particularly troubling, he said, is that government expenditures related to programs for the elderly rocketed in the past 2 decades, even before the first baby boomers, those born in 1946, started turning 65. Now, this is where his track record, you have to respect what he's saying. He stopped managing money for outside clients in 2010 after 3 decades in the business, including more than a decade as chief strategist for billionaire George Soros. From 86 through 2010, he produced average annual returns of 30%, one of the best long-term track records in the industry. Harold, we've talked about the U.S. debt and deficit problem. They're struggling with it now. They obviously had the fiscal cliff. They kicked the can down on the road on that. They have sequestration come March 27th. If they haven't got things under control, the government will shut down. But there are some serious issues that need to be dealt with, and that's why we're saying have that insurance policy in your portfolio, because do you necessarily want to trust the politicians at this point the way they could potentially affect your portfolio? Have hard assets, have that insurance policy.
You're 100% right, Randy. Again, there's nothing wrong with insurance. Most of us believe in it, whether you need it or not. But the fact is that you need insurance with this type of an economy and these type of markets, because we've seen it before. In 1999, the markets plummeted. In 2008, the stock markets plummeted, and it's now 2013. And, the thing is that these financial institutions and the banks, the reason they got into so much trouble was because they highly leverage everything that they do. In fact, the banks and the brokerage firms were leveraged up to 40-1 when the markets crumbled in 2008. Don't you know that they're right back to the same scenario again? So, again, you've got 2 different fields. You've got the people on Wall Street that are saying that things are great. You got the people on Main Street that says that things are terrible, and the job numbers are going to prove it. With 800,000 to 1 million people going to be let go over the next few months, it's going to bring the employment numbers up to over 8%. And again, when they play with the numbers and they don't differentiate between full-time and part-time jobs, I think that's just to get Wall Street to do even better. But don't forget, the general public, the middle class, they're not in the market anymore. Who's in the market? It's the hedge funds, and they move the markets the way that they want. So the markets have never been more dangerous. You've got also one of my biggest fears is what's happening in the derivatives market that are in the quadrillions of dollars, and they're unregulated. That's where the biggest disasters are going to happen.
John Embry from Sprout Asset Management said this week, he was asked about silver. He said, massive silver short positions are going to force the COMEX to default. He says, I think silver is one of the most mispriced assets in the history of mankind. The very fact it's around $29, given all the fundamentals surrounding it, and it's down $5 or $6 in the last couple of months, is ridiculous. The physical offtake in silver is enormous. Inventories in the world are minimal. This is all being done with paper, and the main culprit is J.P. Morgan with their massive short position. I don't know how that's going to work out, but I honestly think there is a very strong probability of some sort of force majeure on the COMEX before this is over. Another great article I encourage you to take a read on our newsletter, Double Line, and this is bond guru Jeff Gundlach. He's very well known. He actually predicted that Apple last year, the Apple stock would fall down to where it is right now today, almost 100% accurate. And he says the great debasement will continue for years, not months. And he actually likes silver at these levels. If you'd like to get our free weekly newsletter, Speak with Worldwide Precious Metals, if you want an education as to why you should have hard assets in your portfolio, gold and silver, platinum, palladium, start your own precious metals investment account, the Company Herald recommends you use Worldwide Precious Metals. Their website, wwpmc.com, wwpmc.com. The telephone number to connect with them, 1-866-623-2002, 1-866-623-2002. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us on the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on March 8th, 2013. Our time is 9:01 in the morning Mountain, 11:01 Eastern. Radio show it runs across Canada. News Talk 1010 in Toronto, 630 CHED Edmonton, News Talk 770 in Calgary. For those listening in Edmonton, we are going to be on at a different time again next week. In fact, it will be St. Patrick's Day. We'll be on from 3:30 to 4:30, and here's hoping that we will celebrate an Oilers win. We're on before the Oilers game, so next week, 3:30 to 4:30 in Edmonton. We're on the radio. We're online. Harold's website's HESradio.com, rarecoloreddiamonds.com. On those websites, Harold has a daily commentary. You can listen to it, and we have thousands of people listening on a daily basis. We also have our podcast. You can listen on a portable device, iPhone, iPod, iPad. All you need to do is have iTunes on your computer. Type in World Financial Report on Radio. The podcast is there. The radio show is portable. To invest in precious metals, the company Harold recommends you use is Worldwide Precious Metals. They can help you start your own precious metals investment account. It's a liquid asset. You can get in and out of the market when you choose with a phone call, secure storage insured to the full value of your investment, 24/7 online access, and you'll have the use of a full-time expert in precious metals. Telephone number 1-866-623-2002 to connect with them. The website, wwpmc.com. It's that time of the show where we talk about diamonds, and Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak personally and privately with him about diamonds, 1-800-432-1022. Our featured diamond of the week is a 0.51 carat, round, brilliant cut, fancy, intense pink argyle. And this argyle is absolutely stunning. Argyle pink diamonds, we know they're rare. In fact, they're beyond rare. With just an estimated maybe 5, 6, 7 years of supply remaining in the mine, as time passes, the argyle pink diamond becomes even more precious. Exactly what gives the pink diamond its color? Well, we're not 100% sure. In fact, there was an article recently where they said they're not 100% sure, and this was the best of the best tried to take a look. All we know, though, is that as the pressure rises, the diamond closer to the surface, it's believed that its structure became altered, thus absorbing light and producing the color. What is also known is that from 100 miles deep within the Earth's surface comes the treasure that we know is the pink diamond. It is so remarkable that nothing compares to its color and brilliance, and it's substantially more valuable than its white diamond equivalent. Although Argyle Mine supplies approximately 90 to 95% of the world's pink diamonds, astonishingly, a whole year's worth of production of stones over half a carat would fit in the palm of your hand. The larger, rare violet diamonds would barely fit a teaspoon. And Harold, that's why they're sought after by investors, jewelers, obviously their customers, celebrities, diamond aficionados. They are prized around the world, and this market is really starting to explode in pink diamonds.
Better believe it, Randy. This is one of the most exciting times that we've ever been involved in, and it revolves around the diamond market. Now, the featured diamond is a 51-round brilliant fancy intense pink argyle. Now, it's a magnificent diamond. Just look at the video of it and see how perfect that diamond is. Not only is the color spectacular, but the round brilliant cut is extremely rare. In fact, the rarest cut, because when a cutter cuts a diamond, he's going to try to make it the best that it could possibly be. And to cut a round diamond, there's a lot of wastage. So unless it's going to be a spectacular diamond, the cutter is not going to cut a round, brilliant diamond. He'd rather cut a oval or something along that line. So this particular diamond, another reason why I brought it up as a featured diamond, is that last week or the week prior to that, there was an auction in New York, and a 51-point, same size as this, round brilliant, same cut as this, fancy vivid purplish pink, so it's the color vivid is higher than the fancy intense pink, and that diamond was supposed to sell for $90,000. It was not an argyle diamond, but it was a beautiful fancy vivid purplish pink .51, and it was supposed to sell for $90,000, and it sold for $338,000. This is happening almost every single auction, that these type of diamonds are selling for 3-4 times what the experts at these major auction houses said that they would sell for. So again, if you're one of the fortunate few to own a vivid pink argyle, you've got an asset that is so rare and is so phenomenal that the amount of money that you're going to make on that diamond over the next 5 to 7 years is probably stronger than anything that you have ever seen investment-wise in your lifetime. Now, I've invested extremely heavily in argyle because, number one, I know the business. Number two, there's not going to be any more of these pink diamonds once the argyle mine closes down. They produce 95% of them. So I have some spectacular, vivid pink argyle diamonds, starting in the $60,000 range and going up to the $500,000 range or more. In fact, I have 3 argyle pink diamonds that are almost a carat, .96s, and they will literally take your breath away. We have just invested over $40 million to get argyle pink diamonds for our clients, and you're going to see the results of that starting to happen right now. We just received 160 of our new argyle pinks. They've all been cut and polished. They've all been to GIA to be graded, and they are spectacular and amongst the best investment diamonds, or the best investments that you will ever make. You see, the thing about the diamond market, it's not like commodities and stocks. There's no volatility to the extent that there's people trading these diamonds. They don't trade. They don't buy on exchanges. It's an individual purchase, and basically you just don't get that type of volatility. In fact, these type of diamonds have never, ever declined in value. And as we get closer and closer to the mine closing down, the higher and higher these prices become. So if you are in a position to invest in the diamond market, we have made available to our clients argyle pink diamonds starting in the $15,000 to $20,000 range. Those would be for fancy light pink argyles. These are all numbered argyles. So basically, if your investment comfort level is under $20,000-$25,000, we do have diamonds for you that will increase by 25%, and that could go up 8 to 10 times what the present prices are when this market closes. If you have $20,000 to invest, and you buy a fancy light pink argyle for $20,000, in 10 years from now, that diamond could be worth $200,000 to you. And we own the only way of reselling them. So if you're a client of ours, we have 8 Siegel Fine auctions, which we sell diamonds at auction for our clients all over the world. We have many clients in Europe where their currency is much stronger than ours, and they buy our diamonds at auction like crazy. The other thing that you should know is that for those who want to be educated on the rare diamond market, I will be doing a seminar, a live worldwide seminar on April the 3rd. It'll be at 8 o'clock Eastern Time in the evening, p.m. So if you want to learn about diamonds, if you want to learn where they come from, what makes blue diamonds blue and pink diamonds pink, how to read a GIA report, what cuts are more valuable than other cuts, what colors are better than other colors. You want to attend our free seminar, and it's online, so you can watch it in the comfort of your own home, and it'll be on April the 3rd. If you're a client of ours or you've been on our mailing list, we will send out information to you so you have that available. But all you need to do is go to my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the investment seminar section, and just sign up for it. It's that easy. And in the comfort of your own home, you're going to sit through an amazing presentation. I'm going to do it for you, and you're going to learn everything you need to know about the diamond business. On top of that, I will be unveiling some of our new Argyle pinks, and on top of that, I have a tremendous collection. I have a collection of antique jewels circa 1930 that will literally take your breath away, pieces that have been in museums for the last several decades. So our company is heading to another level, and I couldn't be more proud of what's happening in the diamond market. So again, if you want to invest in Argyle pinks, even though they're not up on the website yet, we've had several, and I mean several callers, call all during the week to take advantage of some of these lower price Argyles, and that's where most of the money is going to be made. Again, these diamonds can increase 800 to 1,000% over the next 10 years. It's very similar to what happened with blue diamonds that did the exact same thing. In 2005, a vivid blue diamond was $200,000. The mine closed that produced them. 3 years later, it was $1.4 million. From $200,000 to $1.4 million in 3 years, and now a vivid blue diamond is over $2 million. The same scenario is happening with pinks from the Argyle mine, and we have the lion's share of them. We spent $40 million with Argyle. We bought the next 2 years of production just so our clients would be able to take advantage of this phenomenal situation in the diamond market. The other diamonds I want to talk to you about are the yellow flawless diamonds. They're tremendous investments. They start at $15,000 to $20,000. They double every 4 to 5 years. They respond to inflation as good, if not better, than gold. They've gone up 500% in 1979 and 80 when we had massive inflation, and we believe that that's the route that we're going to see again. So we recommend these diamonds very highly. You know, we ship these diamonds directly to you. You own them outright. We do not hold them for you. You own them outright. We ship them directly to you, and we'll send you our newsletters each week, our diamond newsletters each month. We'll send you auction results, and when the time comes to sell them, we're the only company that can resell your diamonds. There's been a lot of companies that have popped up over the last few years because we brought diamonds to the forefront, but you've got to understand that how the diamond market works. And basically, we're fourth-generation miners and cutters. So we mine our own diamonds to a large extent, and we cut our own diamonds. And then what happens when the diamonds are cut, they're sent to New York to the Gemological Institute of America, GIA, where they're graded for their color, their cut, their clarity, and their carat weight, and give you other information on the diamonds. And then basically once they come out of GIA, then the cutters normally have their own salespeople, and their salespeople sell to dealers, and dealers sell to retailers, and retailers mark them up 200, 300, 400%, and then they sell to the general public. So in most cases, the general public would never have an opportunity to buy a diamond from a company like ours, because when you go to a jeweler and you buy a diamond ring, and then 5 years later you want to sell that diamond ring, and you go back to that same vendor, he's going to maybe buy it back from you, maybe not, but I can assure you he's never going to give you back what you paid for that diamond. When you invest in a diamond through my company, it's the exact opposite. There are no salespeople, there are no dealers, and we don't mark them up 300 to 400%. We want our clients to make money because, number one, we care about our clients, and number two, for selfish reasons. We make money when our clients make money. When you buy a diamond through my company and you sell it through my auction business, H. Siegel Fine Auctions, we get 10% of the profit. If you buy a $50,000 Argyle pink and we sell it for $500,000, we get $45,000, 10% of the $450,000, and our clients get all the rest. So you can see how this works, and that's the way I've always felt that if you recommend an investment and your clients do well, you deserve the chance to share in the profits. If you recommend something to a client and they don't do well, you don't deserve the profits from it. So the bottom line is that the Argyle pink diamond market is on fire. If you're one of our clients that own a fancy, vivid pink Argyle, you've made a ton of money over the last 3 to 4 years. If you're not in that market, I've got Argyle vivid pink starting at $60,000 and going up to close to $1 million. I've got the fancy deep pinks, which are amongst the rarest diamonds in the world. I've got the fancy intense pinks, the fancy pinks, and now the fancy light pinks, which are those very soft, beautiful pinks that so many people love. So again, that's the diamond market. We've got an auction coming up on April the 3rd. It's free to everybody. We anticipate having thousands of people around the world participating in the actual seminar, and I'm doing it for educational purposes, and we're going to unveil a lot of our new Argyle pinks, and we're going to unveil a large part of our collection of antique jewels circa 1930. I got to tell you, Randy, I've never been more excited about what's happening in a market like the diamond market, and that featured diamond is one of the most beautiful diamonds you'll ever see in your lifetime.
April the 3rd, free online seminar through rarecoloreddiamonds.com, 8 Eastern Time. You can sign in and view this seminar. And I know when Harold gave the seminar in Denver, it was a great seminar. Unfortunately, we had some technical glitches, but the part that we were able to see, it was fantastic. So I know that all the little issues have been ironed out, and I'm very excited to watch it on the big screen of my iMac. RareColoredDiamonds.com, telephone number 1-800-432-1022, 1-800-432-1022, RareColoredDiamonds.com. The featured diamond of the week, 0.51 carat round brilliant cut, fancy intense pink Argyle. And one thing that I wanted to touch on, I did get a chance to see one of the diamond rings that Harold put together. We offered those a few years back. It was a young couple, a young guy, and he had obviously given it to his, I believe it was his wife. And she had this Argyle diamond in the ring, and it was absolutely stunning. So yes, you are making an investment in a diamond, but there's something that you cannot put a price tag on. And that is the feeling of wearing a ring with an Argyle diamond, or as Harold calls them, those little Millie diamonds all the way around. And that feeling that you get when you walk in the room and know that you are having an exclusive piece of jewelry on your finger and something that is so rare, that is something that you can't put a price tag on, Harold. And that's an issue that we don't really talk about when it comes to investing in diamonds. But that's the case. When a woman walks in with some jewelry, she feels like maybe more than $1 million because she could be wearing more than $1 million. But that's a great side to the investment of diamonds. When you walk into a room and you're so proud of your jewelry and your Argyle pink diamond ring, it really has an effect on you personally, but also all the people around, because everyone was gathering around this girl and looking at the ring, myself included. And I was like, I'm a guy, I don't wear rings, but darn, that looks really good.
It was a beauty. I remember it. And the thing is that when you take a diamond like an Argyle pink and you put it into one of these museum-type settings, it increases the value of it substantially also. So when they go to auction, they can sell for more. But, whether you keep it as a loose diamond or put it into jewelry, when you see the diamond itself, you're just not going to believe what you're seeing, because when you look at a pink diamond, it's like nothing most people have ever seen. In fact, most people have never seen a colored diamond. Do you realize that most jewelers have never seen a colored diamond, nor have they ever seen a flawless white diamond? And flawless white diamonds are ridiculously rare. In fact, the ones that we carry, the D flawless white triple excellent diamonds, represent 0.001% of the market. They're 10 times the price of a normal white diamond, but they go up by 25% a year. They are negative correlated to stocks. When the Dow Jones dropped 50%, they went up 50%. And these diamonds are in very, very short supply. And again, they're colorless and they're perfect diamonds. And we cut about 900 carats of those a year. And they are just the type of diamonds that will take your breath away. So we carry all types of diamonds, starting at 15,000 going up to over 50 million. We have one particular diamond that's one of the rarest diamonds in the world. It's a vivid pink flawless diamond over 10 carats. So That's what we do. We bring these type of investments to our clients. Again, I'm in it right with you. I've never invested more money in anything than I have in the diamond market, and I have absolutely no problem sleeping at night because, again, these are assets that their time is now. And, again, how many other opportunities will we ever have to own a diamond from a mine that is not going to be there anymore? I doubt that this will ever happen in our lifetime again because I don't see where that scenario can happen again. It happened with blues in 2005. It's happening with pinks in 2018. But there's no other diamond class that I could really see that happening. So if you don't take advantage of these pink diamonds at this particular point, this will be something that will bug you for the rest of your life. Because again, when you have an opportunity, and if you just can't make the decision, this is not something that you want to pass on. This is something that you'll do extremely well with and can solidify your retirement and your family's, further well-being type of thing, because it is that type of asset that can make you that type of money.
As we mentioned earlier in the show, Rick Rule, Sprott USA, was interviewed on the Canadian Business Channel. He referenced his friend John Malden, and he was saying, buy assets you can't print. We've said this for a long time. You can't print gold, you can't print silver, you can't print diamonds. We see around the world governments with massive quantitative easing programs in place. Japan is about to start one very, very soon with the new Prime Minister and head of the Bank of Japan. They are in deflation, and they've been that way for 20 years. They are going to crank up the printing presses in a way that is unprecedented, and we could see real strong currency wars around the world. Many countries are very concerned about it already. But Japan, they're committed to this with this new prime minister and new head of the Bank of Japan. We know that the U.S. government is buying $85 billion worth of bonds every month, and this is not going to change for quite some time. So buy assets you can't print. And speak to Harold about our featured diamond of the week, rarecoloreddiamonds.com. The telephone number to connect with him, 1-800-432-1022. And be a part of that online seminar, free online seminar, April the 3rd, 8 Eastern. Harold does a great job with seminars. Obviously, we know him as a great speaker on our show, but does a great job with seminars online. I know that you and Jonathan and your other son, Evan, have put a lot of time and effort into this online seminar, Harold. We have about a minute left, so it's a good one.
It is a good one. And again, the last seminar that we did, we didn't control it. It was live streaming, which always has its issues. This is a new technology. I just got a $7,000 camera that will make this a phenomenal event. So I'm hoping everybody will attend.
Thank you very much, Harold Siegel, for your knowledge, and we really encourage people, obviously, to connect with you through Rare Colored Diamonds, be a part of the seminar, and really educate. You'll educate people as to why they should have that alternative asset class in their portfolio, rare diamonds.
You better believe it, and it'll be my pleasure to do so. I'm looking forward to it. I wish everybody a wonderful weekend and a very profitable day.
Don't forget, when it comes to investing in precious metals, the company Harold recommends you use is Worldwide Precious Metals. Their telephone number is 1-866-623-2002. Their website is www.pmc.com. Start your own precious metals investment account today. They are the experts in this very specialized field, as Harold is when it comes to diamonds. Let them educate you as to why you should have gold and silver, platinum and palladium in your portfolio. This is a liquid asset. You can buy and sell with a phone call. Secure storage insured to the full value of your investment. 24/7 online access, and you'll have full-time representation, somebody taking care of you, making sure that you're maximizing the profit, minimizing the risk. And now, in the times that we live in, it's important to buy assets that you cannot print. Speak with Worldwide, www.pmc.com, 1-866-623-2002. For the Rare Colored Diamonds, rarecoloreddiamonds.com, or 1-800-432-1022. Be a part of that seminar, April the 3rd, 8 p.m. Eastern, that Harold is putting on. I know it will be a good one. And don't forget, for those that are listening in Edmonton, next week it will be St. Patrick's Day, which is a good day for the Irish like myself. We are going to be on at 3:30 to 4:30, just prior to the Edmonton Oiler game, as we are this week. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.